In a country with one of the highest rates of inequality in the world, executive pay is massively contentious. In the current gold wage talks, for example, unions displaying the salaries of mine bosses when they demanded their own wage hikes, so they're boxing smart. This is Tonight. I'm Bruce Whitfield, and tonight I'm joined by Gerald Seegers. He's the head of Human Resource Services for Southern Africa at PwC to discuss their latest report on executive pay. For years, we've seen executive pay going off the charts. You have to make longer books to accommodate the elements of executive pay.
Right.
Is there any sense of dignity and decorum entering the remuneration committees of big companies?
Certainly, I think that this year in particular, year on year, we've seen that I think an element of restraint that has crept in, and we're talking about particularly in the South African market. For the first time, we've seen single digit overall.
So wages are still going up,
wages
but
still
just by
going
less.
But by less. Interesting, if I look at the same comparison in the UK, for example, 45% of CEOs there have taken a zero pay increase, and the median's around 2%. So even though ours are going up, there's the perception still that, look, they are still going up. Okay, are they too high? Our answer would be no, still not too high. And our report now identifies a whole host of other issues starting to creep up. So the impact of regulatory, decision that are now taking impact on the executive pay.
No, I mean, there's a huge pressure around the world on executive pay. The UK, clearly it's working there with 45% of CEOs taking a zero increase. In South Africa, we have lots of political, social, union pressure, but not regulatory constraint, do we?
No, what we've got at the moment is King 3, which has given us some guidelines, and it's only a guideline. We will wait probably to the next version of King 4, and we expect in that King 4 quite a few more updates to the regulatory. But again, it's not regulatory, they're just going to be guidelines to which we should be complying to meet what we would consider to be best practice.
Now, people watching this who don't earn as much as the average chief executive will say, well, this is just CEOs paying lip service. They make so much money that taking 5% on 10 million is still better than 20% on 100,000.
True. I think, and again, the question is that, look, they are managing big companies, big corporates, and again, you and I, our pension is determined on those corporates still performing. So what we have seen this year in particular, globally, is this whole question around pay for performance. So we have seen that starting in South Africa, and there's some good examples in South Africa, but they're still in the minority, where the SEC, for example, the Securities Exchange in the US, want companies to disclose now their pay for performance. You know, if you look at your share price year on year, if it's gone up by, let's say, X%, executive pay should be no more than that.
Okay, share prices are one thing, but there's also internal performance. This is where it becomes so complicated because there are various matrices, and boards will say, well, complied, we ticked the boxes, and Johnny, the CEO, did incredibly well. The share price did nothing this year, but we don't make the market, we just run the business. I mean, that's a PR line if I've ever heard one. And that's what becomes difficult when it becomes, what do you test as performance by a CEO?
Yeah, no, and I think that's where we've seen, for example, in integrated reporting, well-entrenched practice in South Africa. But what's missing at the moment is the sort of more disclosure around the discussion, the linking of the strategy or the purpose of the company with their remuneration policies and practices. So what you tend to find is that, look, the base pay, it's the guaranteed pay, that's whether the performance of the company goes up or down. So that you're going to get paid your 10 million rand. Now the next question is, well, okay, if the company does better, it performs at budget, that CEO is likely to get 20 million. And if it really outperforms, he'll get 30 million. And it's the other 20 million that we're really looking at. Now, the US kind of using shareholder return and share price as some of the indicators. I think most boards and most REMCOs would have identified certain performance metrics. The problem we've seen is they're not disclosing why they're choosing those performance metrics. So there's a little bit of uncertainty sitting with shareholders.
And if I'm a trade unionist, and we're talking about triple bottom line reporting, we're talking about stakeholders, we're not just talking about shareholders, we're talking about everybody in the business, everybody from who makes tea to the financial director to the chief executive, everyone should be considered as a stakeholder in these businesses. If I'm a trade unionist and there is triple outperformance by the company this year, and the CEO, instead of getting their 10 million, gets 30 million, I go, hold on a second. The CEO didn't do this by themselves. Where's my share of that 20 million rand bonus?
Absolutely. So again, there's what's not a common, or not a common phenomenon, but a clearly outlined phenomenon is the productivity bonuses. So what we want to start seeing is more productivity related bonuses.
Trade unions, we don't like productivity in the trade union movement because that implies you want us to work hard.
Exactly.
So back off on your thing, we want guarantees.
Well, that's where you come back and say, look, well, and that's this whole question of national minimum and more minimum wage, and saying, look, well, a minimum wage at least to work. And if you produce, you will get paid more.
Yeah, I mean, look, it makes sense depending on where you sit in the pecking order of a business, of course.
Absolutely.
Many of us would like to be incentivized on our individual, our team performance. For many people, though, especially people living on the breadline, they'd like a guarantee of increases and certainty. It's the principle of collective bargaining, which is at odds with the principle of how executives are remunerated. Do we ever see what you might call, I don't know, a toenadering, to use the term?
A narrowing of the gap.
A narrowing of the gap, thank you.
Probably a narrowing of the gap to
some degree. In terms of our approach, in terms of the way we think about pay, not necessarily narrowing the wage gap. That's next.
No, exactly. The wage gap, I think, is there, and what we don't want to see is that widening. Okay, and remember, we're only comparing the guaranteed pay of the both parties, so that's taking production or performance out of it. It's just we don't want that to widen, and hence the idea of the minimum wage. We still think that we want to introduce two concepts: a social wage and a living wage.
No, take me through, because George Osborne, the UK Chancellor, came out with the most remarkable budget recently, the first Conservative Party budget in Britain in 20 years, purely Conservative Party budget. They had to deal with their friends in the Liberal Democrats last time, and before them it was Labour. He came out with a £9 an hour, what he calls a living wage, but that's a minimum wage, isn't it?
Well, in their case, like the US, their national minimum wage, they for the first time, in fact, the UK do have a living wage, but it's voluntary. Okay, it's like us being getting a B accreditation.
Okay.
So you subscribe to that, and you then advertise that you're a living wage employer. I certainly think there's room in South Africa for that. In the UK, yesterday, in the budget, he announced the fact that their national minimum wage will now be called a national living wage. So we mustn't mix those two terms.
Why they're different?
I think, well, they should be different. Yesterday, I think it's more a political move to change their national minimum wage to national living wage. Now, it's interesting because the living wage has just been increased to £7.85. The living cost in the UK is £9.20. Their minimum wage was £6.50. So that's a massive jump from £6.50 to £9. Now, I'm not too sure if it's the 9 by a particular date or whether that was 9 as of today. Because the US, for example, increased their living wage from $9 to $15, but by 2020.
Now, do we need to be doing this in South Africa? There's lots of political talk that we need a minimum wage and a living wage in South Africa, but we've got a bigger problem, and that bigger problem is 40% of people who either can't or won't or just have given up trying to find work.
Well, exactly right. So, I mean, a lot of the living wage and that argument's around those employed. And that's why I say the other side of the spectrum is also the social wage. We've got this massive problem where, as you say, 40% unemployed. How do we create jobs in this job? And as long as we have the unions force us to pay minimum wage, it works counterintuitive into creating jobs.
I mean, there was a great report the other day which was talking about the need just to have absolutely no minimum wage and to encourage job creation and allow the market to sort out what a basic wage would be. If you're prepared to work for $500 a month and somebody's prepared to exploit you at $500 a month and have a grumpy workforce, well, that dynamic will sort itself out.
I think there's argument for it. I'm not saying there's no argument. Obviously, there's labour laws and you don't want to be abusive. But certainly there should be an argument say, look, well, why is it not, I'd rather pay 500 Rand to somebody who's prepared to work than pay somebody now, which 3 people now, I'm going to pay one person 1,000 Rand and he doesn't even want to work. So I think there's a lot of work that can be done in South Africa. I think both spectrum should be looked at and should be considered. I know South Africa is looking at an idea of going to a national minimum wage. Is it the answer? I don't think it's the answer. Looking at the other two, yes.
But how do we break the cycle of greed at the top and abject poverty at the bottom?
Yeah, it's a difficult one because I think what we are saying is that, look, at the top, that CEO's got to look at his junior work and saying, look, he hasn't exploited it. And I think that has taken place. We've passed that hurdle. Most CEOs in this country would say that, look, they are looking after the benefits of the employee. The problem is that, you know, it's expensive to be poor in South Africa. So just
elaborate on that.
Well, just the cost of getting without a transport system. It's just the cost of getting to work.
Your basic costs are so high they erode a vast proportion of your salary.
No, that's not the CEO's problem. But he's trying to accommodate that and says, look, well, I'll pay you above the minimum wage to try and accommodate your transport costs. Just for example, finding then, as we saw today in Mamelodi, now just to find a job or get to work is actually quite dangerous.
Yeah, but let's go back to the point you made right at the beginning, that even though executive salaries are criticised by the trade union movement, by media, by popular society as being excessive, your contention is they're not too high.
They're certainly not too high. If you convert it into dollars,
we live here in South Africa in rands.
Yeah, our CEOs are mobile. Okay, and in fact, if you take, we've got 1,180 executive directors. 140 of them are paid in foreign currency.
Yes, but how many South African domiciled executives have gone to work in another country in a similar position in the last 5 or 10 years?
I think there's quite a few, because if you're expanding across border, because of cultural issues, a lot of them do go across border and understand the culture when you're going into those different markets, whether that's Africa or whether that's China.
No, I'm talking about you leave your cushy job at Standard Bank or Nedbank and you go and work at HSBC or Citibank. Zilch. Is that not a dud argument?
Probably. I mean, that's the thing. Our CEOs are happy to work here. That's why they are not globally. They're not paid the same as their global counterparts. So it's not about the quantum of their pay.
So you get a discount for working in the sunshine.
Working in South Africa. But now we want them to focus on the other end. I think there's a large of them do that, but there can be more. But now we've also got to address the unemployment side. And we've got a cross-purpose with labour laws and this national minimum wage fighting against
Are the incentives not completely skewed against that? The government is, and we've got a trade union movement. Gwede Mantashe the other day was having a full go at the death of industrial unions. And my response to that was simply, well, if industry dies, so do unions. So create a market where business grows, union memberships will grow, and you will flourish. Tax takes will increase. Absolutely. Somehow there's a government disincentive to really creating private sector jobs.
Exactly. I agree with that. And I think, they did a great job with the employee tax incentive 2 years ago, and the take-up, that was actually pretty good. And you have a look at, because all the guys really want is a job, a little bit of something. Once they got entry into the job market, they become more marketable. But it's not the correct way to do it through the tax system.
There we go. Last word. There we go. Gerald Seegers, thank you very much. Gerald Seegers is the head of human resource services for Southern Africa at PwC. Fascinating, contentious, always worth a chat, talking about executive pay versus the rest. Thank you for watching. There'll be more tonight, tomorrow. Till then, good night and goodbye.